Coffee Stain Group. Coffee Stain is a Swedish gaming company recently spun out of the Embracer Group. Embracer Group and the former CEO Lars Wingefors went on a wild spending spree during the COVID years and gobbled up many interesting companies. They took on too much leverage and spent above the intrinsic value for the companies they acquired. As with all these kinds of stories, they either end up with bankruptcy or spin-offs of the previously acquired companies. In the latter cases, many quality companies may be thrown away with the bathwater, and opportunities for mispricings occur. I believe this has happened in the case of Coffee Stain. Coffee Stain trades at a market cap of around 4 billion Swedish kroners at a share price of around 17 SEK per share. Some of their most notable titles are Satisfactory, Goat Simulator, and Deep Rock Galactic. In addition, they are the publisher of Valheim, which is set for full release later this year. Coffee Stain specializes in so-called co-op action games, which is best consumed with friends. This, at least in theory, reduces the risks in the titles. These kind of games usually have longer tails and more stable revenue streams. This is attractive for investors and reduces the inherent risks that potential failed new game releases may incur. Coffee Stain generates strong free cash flow from their core IPs. The recent history as a member of Embracer, however, has made their balance sheet look pretty bloated, with large amounts of goodwill. Thus, owner earnings and free cash flow will be stronger than the reported earnings. In addition, the company had large one-time costs when they were spun out of Embracer. These costs are not recurring. Thus, forward earnings and free cash flow may look stronger than the market anticipates. The company's CEO is the founder, who owns a large equity stake in the company. After the Embracer spin-off, he has bought large amounts of stock. The company pays a modest dividend while buying back stock. I believe the outlook for shareholder returns are strong, keeping in mind the inherent risks when investing in gaming companies with their hit-and-miss nature. In May, Coffee Stain released Deep Rock Galactic Rogue Core. The release had initially strong sales due to it being a beloved title. However, the reviews are mixed and the franchise has taken a hit. This is cause for some concern. A problem with gaming companies is that the market has varying opinions about the terminal value of the companies. Smaller game studios often has a very low multiple, while companies with more titles and stable cash flows can enjoy very high multiples. So what multiple will the market put on Coffee Stain? I believe that the resilience and stability of cash flows in Coffee Stain will surprise the market over time. Even in quarters without major releases, the company will still be able to deliver strong results. We saw this in the most recent quarter. There were no major releases, but the company grew from their core game portfolio. This is because of the strength of their core IP, like Satisfactory. Over time, the company must deliver new titles to grow, and it was disappointing that their first release after the Embracer spin-off received mixed reviews. This could make a re-rating of the multiple a bit challenging in the short run. Also, the roadmap for new games in 2027 is soft, and revenues could struggle to grow. In the very short term, the company will get decent sales for Deep Rock Galactic Rogue Core in the next quarterly report. In addition, Valheim will make a full release later this year. Therefore, I must advise potential investors in the company to try to be a bit opportunistic. The company is attractively valued at these levels, in my opinion. The EV to free cash flow is around 10 times due to their ownership stake in Iron Gate, as well as non-recurring costs from the Embracer spin-off. Still, the shares of gaming companies often trades on the back of news as well as the roadmap. If the company has a spike in the share price due to strong Q1 results or strong Valheim sales, opportunities for short-term profits may occur. However, below 20 SEK per share, I believe it's a good entry point for long-term investors, and I believe the terminal value of the company will increase over time. In the short term, however, New releases and the outlook for new games will make the stock fluctuate more than the intrinsic value in the company. This is not investment advice. Thanks for listening.